Full reserve banking, the system that solves almost every banking problem. Want to stop banks suddenly collapsing? Want to stop bank bailouts and bank subsidies that cost taxpayers billions? Well, there's a simple way to do all that. Just dispose of the fraudulent element in banking. As Martin Wolf, chief economics commentator at the Financial Times, put it, if we were not so familiar with banking, we would surely treat it as fraudulent. So where's the fraud? Well, it's simple. Banks accept money from depositors and lend on that money. At the same time, they promise to return that money to depositors. But there's a very good chance that during the life of any bank it will make silly loans or have bad luck with its loans, at which point it won't be able to repay depositors all their money. So the bank is bust. And the indisputable fact is that banks regularly go bust. The above promise made by banks to depositors is no different to you taking money off your friends for safekeeping, then investing the money on the stock exchange. That strategy may pay off 9 years out of 10, but at some point the strategy is near guaranteed to come unstuck, e.g. in a 1929 type crash, at which point you have to tell your friends they can't have all their money back. That's fraud. In contrast, if you told all your friends what you intend doing with the money, and you all agreed to share profits and losses, that's open and honest. Same goes for banks. If depositors who specifically want their money lending on or investing so as to enable them to earn interest agree to foot the bill when the loans or investments go wrong, that's open and honest. In effect, lending is then funded by what amounts to shareholders. In contrast, for depositors who want their money to be 100% safe, they'd put their money into accounts or organisations which simply lodge the money at the central bank. But little or no interest would be paid on such money. Not that current or checking accounts get much interest anyway. Incidentally, money lodged by commercial banks at their central bank is often called reserves, hence the term full reserve. Moreover, under full reserve it's impossible for banks to suddenly go bust. So that means an end to credit crunches, or at least they'd be less severe. Plus there's no need for taxpayers to stand behind private banks, which amounts to a taxpayer-funded subsidy of private banks. And that subsidy is worth billions. It's totally unjustified. The reason that sudden bank failures are impossible under full reserve is as follows. As to safe or full reserve money, that is lodged at the central bank, so it's 100% safe. As to money being loaned on, that is funded, as just mentioned, by what are in effect shareholders. So if the relevant bank makes silly loans, all that happens is that the shares fall in value. The bank does not actually go bust. Note also that that system has similarities to Islamic banking. That's a system where lenders have to share in the profits and losses made by borrowers. Not that these videos support every aspect of Islamic banking. Now you might think that the new bank regulations currently being introduced in 2014 will sort bank problems. Well, sorry, but numerous authorities, including Gordon Brown, Britain's former Prime Minister, and Alistair Darling, Britain's former Finance Minister, have said that those new bank regulations are near useless. There's a list of articles at the end of the longer video by Brown, Darling and others explaining why the new regulations are defective. You might also be worried that the banking system proposed here would involve higher costs, thus interest rates would rise. Well, interest rates could rise a bit, but if garages and restaurants have been subsidised for the last century and the subsidy was removed, then car repairs and restaurant meals would cost more. But that wouldn't justify subsidising garages and restaurants, would it? Another objection you might have is, If this new system is so wonderful, why hasn't it been proposed before? Well, it has, and by numerous leading economists, past and present. Here are some of them. Incidentally, don't assume that any of the people mentioned in this video agree with this video, though they probably wouldn't flatly disagree. And you might also be wondering why, if full reserve is so wonderful, the above-mentioned economists haven't managed to get the system implemented. Well, the answer has a lot to do with corruption. That is, the present system, under which banks are subsidised, suits bankers, and bankers pay big bucks to politicians who supply the subsidy money. Interested? Then watch the longer video. Incidentally, the longer video repeats some of the material from this video. You might find that a bore. On the other hand, the material is presented in a slightly different way, so that might help you understand the subject. Thanks for listening.